Asian markets hold steady as investors monitor potential escalation in the Russia-Ukraine conflict. Technology fuels growth in Africa as innovators aim to bridge the continent's digital divide. And we look at rising global logistics demand as the holiday season approaches. Hello, I'm Tayyiba Aydin with the latest business and finance news here on TRT World. Investors were cautious on Asian equity and currency markets on Wednesday as they assess the prospect of an escalation in the Russia-Ukraine conflict. Chipmaking stocks in South Korea and Taiwan were under pressure ahead of a third quarter report from the world's most valuable company, Nvidia, which will determine the direction of the artificial intelligence frenzy that has gripped markets. Meanwhile, US stocks ticked higher ahead of the anticipated results, with Nvidia advancing nearly 5%, helping boost the Nasdaq and S&P 500. The rising geopolitical tensions between Ukraine and Russia, passing the 1,000th day mark, helped lift Bitcoin prices, with the world's biggest cryptocurrency surging past $94,000 for the first time. And gold prices continued to rise for a third straight session, driven by a softer dollar and escalating geopolitical tensions, raising demand for safe haven assets. Now a quick look at some of the other top business stories from around the world. US President-elect Donald Trump has nominated Howard Lutnick as his Commerce Secretary, signaling a tougher trade stance on China. Lutnick supports higher tariffs on imports to boost US manufacturing. He will also oversee trade policies and work to reduce reliance on Asia for key industries like semiconductors. Trump's pick reflects his focus on protecting American jobs and strengthening the economy. Japan's exports rose more than 3% in October, recovering from a 1.7% drop in the previous month. Imports also edged up 0.4%, slightly above forecasts. But the trade deficit grew more than expected to around $3 billion. Analysts warn that potential US tariffs under Donald Trump could pose risks to Japan's export-driven economy. The International Monetary Fund has downgraded South Korea's economic growth forecast from 2.2% to 2%. The IMF highlighted geopolitical tensions and a slowdown in global trade as key risks to growth. Semiconductor exports are projected to provide some support, but weak domestic demand is still expected to weigh on overall performance. And Milan has overtaken London and New York to claim the title of the world's most expensive shopping location. Rent on Milan's Via Monte Napoleon has risen by 11% to around $22,000 a square metre, making it the highest headline rent across 138 global retail destinations. The surge in retail prices is driven by an influx of affluent tourists and intense competition amongst luxury brands for prime retail space. Let's get more on the markets now with Rafet Zahidov. He's an independent market analyst in Istanbul. Good to have you on the program, Rafet. Now, traders are being cautious over geopolitical tensions. What could be the impact of the conflicts between Russia and Ukraine escalating?
The increase in geopolitical tension, especially the nuclear tension between Russia and Ukraine, has increased market volatility at the stock market. This could be bad news for traders because market volatility means sharp movements up and down. So this could mean big losses if the market dips, but gains if the market goes up. This is why also the option sellers, it could be risky for them as well. This is why traders tend to hedge their positions by buying call options or put options. So if there's a sharp movement due to high market volatility, they can protect their positions.
Right, and gold and Bitcoin are on the rise as the dollar softens. How far do you see both of these rising?
Well, we've seen Bitcoin hit all-time highs, going above $90,000. and also gold has gone above $2,500. And we've also seen the USD soften a little bit. This is due to increasing geopolitical tensions, but also the instability of the market due to American elections. So people tend to divert away from the USD to find other safer investments. I see this as surge in gold and Bitcoin to go until the new year, and also dollar may also soften as well. But as the market stabilizes, we'll see dollar pick back up, and also gold and Bitcoin will hit a resistance level where their increase will fade out.
Now, all eyes are on Nvidia, which is set to report earnings later in the trading day. How could this spur Wall Street?
Well, this year has been great for Nvidia investors. They've been hitting all-time highs. And also, due to the increase in Nvidia's positions, the tech sector at the Wall Street has also increased their stock market price, also the market share. This is because of the increase in the surge for artificial intelligence, but also the data center sales for Nvidia. Today, there will be earnings, and we expect Nvidia to increase its market position and market price. However, traders have to be cautious because earnings report can lead to unexpected moves. There could be a dip in the market that can also increase. But in the long run, we expect, and the Wall Street expects, an increase in the market price for Nvidia and also the tech sector.
Okay, we will have to leave it there. Rafet Zahidov, independent market analyst there in Istanbul for us. Thank you very much for joining us. Now, Africa is enjoying a digital and economic transformation with surging tech adoption, innovative AI applications and expanding connectivity. Recently, the Africa Tech Festival shone a spotlight on the continent's growth potential, bridging gaps in infrastructure and fostering opportunities for global partnerships. These developments are shaping the continent's future in several aspects. We begin with Africa's GDP, where growth was at 3.8% in 2024 and is projected to rise to 4.2% in 2025, surpassing global averages. The continent's middle class has tripled to 310 million over 30 years and is expected to surpass 1.1 billion by 2060. This economic and demographic shift creates vast opportunities for tech, innovation and business ventures. Africa's telecoms market is valued at $16 billion in South Africa and over $9 billion in Nigeria. 5G adoption with 180 million subscribers is projected to add $11 billion to the sub-Saharan economy by 2030. Affordable handsets and data plans are driving mobile service demand, boosting connectivity and digital services. The AI market in Africa is expected to grow from $3.7 billion in 2024 to $16.5 billion by 2030. Applications in fintech, healthcare and agriculture are revolutionizing access and boosting productivity. Africa's youthful, tech-savvy population is a catalyst for the AI-driven digital revolution. Africa's cybersecurity market is projected to grow from $2.1 billion in 2024 to $3.3 billion by 2029. 85% of organizations increased their cybersecurity budgets in 2023. Investments focus on advanced encryption, integrated security platforms, and MDR solutions to safeguard data. For more on this, we're joined by Priscilla Dubé in Cape Town. She's a fintech growth marketer. Good to have you on the program, Priscilla. Now, how can Africa's middle class expansion influence its role in the global digital economy?
Good morning, and thank you for having me. So like you mentioned, Africa's middle class is expected to continue growing, and it's projected to grow to 1.1 billion by 2060, driving demand for digital services. And in terms of growth sectors, fintech is leading this growth, especially in the areas of payments, wallets, and remittances, with revenues projected to hit 30 billion by year 2025. And to increase expansion and growth, we need more Africans in the middle class segment to adopt digital tools. And I believe that education and awareness on how to use new technologies will be a key player in making this possible.
And what challenges do infrastructure gaps pose for Africa's tech and telecoms growth, and how can they be addressed?
When it comes to infrastructure gaps, such as unreliable electricity and limited broadband access, those remain significant barriers. Currently, only 40% of Africans have internet access, compared to a global average of 66%. So to address these challenges, I think there needs to be more partnerships and collaboration between the private and public sectors. And governments should also create policies that encourage investment in remote and rural areas in order to increase digital inclusion.
And we mentioned artificial intelligence. How is AI transforming key sectors like agriculture and healthcare? And what opportunities does this create?
AI is revolutionizing agriculture by improving crop yields, and in healthcare through diagnostics and genomic research, as seen with companies like 54Gene. And blockchain is also gaining traction in supply chain management, and these technologies are driving innovation and creating new business opportunities across the continent.
What about cybersecurity? How can businesses enhance their cybersecurity in this rapidly digitizing market?
So firstly, cybersecurity is critical, with cyber attacks costing Africa 4 billion annually. And some of the steps that businesses can take to prevent cyber attacks include investing in employee training, adopting international security standards, and using AI as well for real-time threat detection.
Okay, Priscilla Dubé, we will have to leave it there. Thank you very much for your analysis.
Yeah. Thank you.
Still ahead on the programme, investment in Islamic finance is surging and Turkey is stepping up, collaborating with Malaysia. We have more on this after this short break.
Russian missiles targeted 17 people were killed and 40 wounded. The final farewell from innocent students.
No, it's much more important. Beyond the game. On TRT World.
As the year draws to a close, there's a sense of excitement in the air. From the sparkle of holiday lights to the excitement of picking out gifts, it's that time of year again. But behind the scenes, logistics companies are also getting ready for a surge in demand. Ömer Bakkaloğlu reports.
The end of the year is all about gathering, celebrating, and of course, exchanging gifts. But for businesses, it's also the most crucial period on the calendar. During the final 3 months, known as the golden quarter, retailers typically see a surge in sales in the lead up to Christmas. Across Europe, the logistic machinery is already in high gear.
Lights are important because the pre-Christmas period is simply a crucial time for retailers, not just in the city center, but on all shopping streets. When you stroll through the city, you enjoy shopping more, and that's how it should be.
From warehouses to delivery vans, companies are racing against time to meet the surging demand. According to a new study by delivery giant FedEx, 6.2 billion parcels are set to be delivered across Europe between October and December. That's a 9% increase from last year. Online shopping remains the driving force behind this growth, with nearly 70% of shipments expected to go directly to consumers' doorsteps. The UK, Germany, and France are projected to see the highest volumes, accounting for a significant share of this delivery boom. This surge is providing a welcome boost to retailers, especially after years of disruption caused by the pandemic and supply chain bottlenecks.
We've already noticed this year that things have improved. That's we've probably sold at this point in the year, we're just at the beginning of November, threefold what we ordered last year.
But it's not just online orders that are surging. In-store shopping is also making a strong comeback as people crave a more personal shopping experience.
I'm not sure that people will be having bigger Christmases, but I think we'll be visiting more people. I think as post-COVID, as the years have gone on, I think people are just itching to get out there, go and visit different people, catch up with people that we haven't seen for a long time. Actually, I think the same is true for shopping. So I think the brilliant part about Spirit of Christmas, when it brings all the brands together under one roof, I think now people want to go out, touch and feel what they're buying.
As the countdown to the new year speeds up, retailers and logistics firms are hoping this holiday season will be the light at the end of a long tunnel. Ömer Bakkaloğlu, TRT World.
Islamic finance is becoming quite a buzzword in the world of banking, particularly but not exclusive to the Middle East and Asia. It's a way of managing money and doing business while adhering to the moral principles of Islam, and it has Turkey's full backing. The President's Finance Office, along with the Participation Banks Association of Turkey, got together with the Malaysian Financial Planning Council here in Istanbul to increase know-how and collaboration. Emre Boz was there and sent this report.
The Islamic finance industry is on the rise. Analysts say that the sector will be worth at least $6.6 billion by 2027. And Malaysia is a key player in the sector. It's ranked third globally in terms of the total number of assets in Islamic finance. Almost 1 in 5 of these total assets belong to Malaysia. That's a dollar value of $620 billion. So what makes Malaysia so special? They're leading in areas such as regulatory frameworks, technology, and innovation. And that's why Turkish businesses and entrepreneurs invited these Malaysian experts here in Istanbul to give seminars and training. Sharia-compliant investments are growing exponentially. They're reaching a growth rate of 128% year on year. Events like this allow Turkish and Malaysian counterparts to foster these collaborations and knowledge transfers between one another, trying to make Turkey a hub for financial investments. And as Turkey becomes a hub in Islamic finance, it will attract foreign investment into the country.
In Malaysia, there's a lot of progress of Islamic finance, especially because the number of people having this realization that you need to, as a Muslim, they need to embrace the Islamic finance. The concept under Islamic finance, they are also, they don't have element of riba and maisir and whatnot. And it's more certain in that sense, so that they know exactly how much is their commitment as it goes forward and so on. So in finance, Islamic finance also is about taking responsibility. It's making sure that you know what you're getting into. There are certain tenets in Islamic finance. For example, we talk about takaful. In Malaysia, we talk about Islamic insurance. We call it as takaful. Takaful, there's an element of tabaruk, for example, where element of contributing to the society. Now, if one really understand that concept of contributing, that is jariyah on your part, that you are making contributions to the society. Here, basically, we want to share this model of financial education, but there's a lot of collaboration also between Turkey and Malaysia in terms of knowledge sharing and whatnot. I do see a lot of colleagues here who have somewhat been working in Malaysia or not through either universities or private sector. But it's common in terms of the knowledge, in terms of the terms and the banking or not, Islamic banking, that there are many commonalities and things that we can share, especially in the light of financial education. we do a lot of financial education. I understand my bucket here, there's a lot of financial education. But what is unique in Malaysia is we have as far as our agency, we are doing debt consolidation, which is unique, which we can share to the people in Turkey.
Let's go back to our previous story on global logistics and speak with Peter Sand. He's Chief Shipping Analyst at ocean and air freight rate analytics platform Zenita, and he joins us now from Copenhagen. Hi, Peter. So how are rising costs such as fuel and labour affecting shipping companies, and will this be felt by consumers this holiday season?
Yeah, thanks for having me back. Definitely, no one will be immune to rising cost of logistics, whether that comes in the form of labor disruptions or higher fuel prices. It is inevitable that consumers like you and I will feel that pressure, mostly from lower priced goods, where the importers are unable to absorb any cost change like we see right now, where the Red Sea disruption is definitely having a huge impact on global container shipping logistics.
Right, and as you mentioned, their supply chain issues have been a recurring concern in recent years. Are we likely to see these disruptions again this year?
Yeah, at Zenita, we anticipate that there is no swift resolution to the problems causing massive delays and rerouting of container ships to avoid the Bab el-Mandeb Strait and the Houthi rebels shooting at commercial ships. So I think everybody should do what they have done so well in logistics, prepare themselves for these disruptions, bringing in goods faster than they would probably otherwise do, build inventories to absorb shocks like this, and of course prepare customers for whatever price hike and delays that may be around. But I think it's fair to say that Christmas presents are ready under the tree soon. But going into 2025, we should expect geopolitics to keep impacting freight rates, freight markets, and basic logistics at all.
And the holiday season is often synonymous with delays or lost packages causing late gifts. How can AI help the logistics sector manage holiday season pressure?
I think everybody working within logistics are using the available tools to gain insights and intelligence about the market, AI being one aspect of it, but in essence, monitoring transit times, being able to foresee how a disruption like a potential US port strike will impact supply-demand balance and how that will lift the short market, perhaps also the long-term contract market, at least for a foreseeable future. Is something that everybody is trying to get their head around. So I would say know your logistics requirement to the utmost detail, and then act on top of that in a smart way. Know when to go tendering, know when to play your cards right, negotiating with forwarders and carriers, and then you probably bring yourself to a good place using AI or any other tool around, bringing you intelligence on the market.
Okay, Peter Sand, Chief Shipping Analyst at Zenita. We will have to leave it there. Thank you very much for joining us.
You're very welcome.
Now, British farmers have been demonstrating in London against tax changes, which they say will have a devastating effect on the industry. The government says the change would only impact a small number of the wealthiest farms, but farmers dispute that, as Shadia Edwards-Dashti reports.
Equipped with their tractors from the fields to the streets, British farmers chant, "No farmers, no food," against the government's new so-called tractor tax on inheritance, the final straw. Farmers say that this could be the beginning of the end of the farming industry in the United Kingdom. Thousands of farmers have taken to the streets of central London to protest against the inheritance tax and try to change the future of farming forever. As the government tries to fill a $27 billion black hole, farmers with land worth more than $1.2 million won't be able to leave their farms with their children tax-free. The PM says the measure will only hit the wealthier estates, not the majority of farms.
The vast majority of farms will be unaffected, and those that are affected will only pay half the inheritance tax that other people pay, 20%, and they will have a 10-year period over which to pay it.
Farmers challenged the calculation, citing the government's own figures, which show 66% of farms are valued at the threshold. And so, come 2026, they'll have to find the cash, which could be hundreds of thousands of dollars, or sell land. Farmers say this will have a devastating consequence.
They just haven't got the money. There's no cash. They're barely making a living.
Generations of families will be broken up. The next generation won't be able to farm.
There has been a seemingly never-ending chopping and changing of farming ministers as various prime ministers have come and gone. It adds to the anger among farmers of not being listened to. They say if Westminster fails to listen now, they'll plough on till the government backtracks on the tractor tax. Shouty Edwards-Dashley, TRT World, London.